how to best position ahead of another Trump administration, with talk of tariffs and tax cuts and so much more for investors to consider. On that note, let's bring in Liz Young-Thomas, SoFi's head of investment strategy, with me here at Post 9. It's good to see you.
Good to see
Welcome.
you, too.
I'm just going to remind you, we'll break away and go to the White House if we see the president. But how you're thinking about the market today, which is doing a pretty darn good job brushing off news of more tariffs, at least what the president-elect is talking about.
Yeah, I mean, if you tuned in right now, you'd look at this and say it's kind of a boring day, flattish to up. But knowing the news that we came into the morning with, knowing that the market was down and volatile earlier in the day, and then seeing where it is now, I think is just further proof that this has been a rally of sentiment. This has been a rally that can last, and people want reasons to buy. And there continues to be a bid for a lot of different sectors, many sectors now almost in overbought territory, but almost brushing that off as well. So it doesn't really matter if they're in overbought territory. People still have appetite to buy equities. So the tariff talk today, I think what we're going to continue hearing is a lot of severity in the proposals, but then softening in the execution when it actually happens. And I think that's part of why the market is brushing this off. Also, even if the China tariffs do go into effect, these are not a surprise. This is almost exactly what most people expected. And perhaps they go into effect immediately when Trump gets inaugurated. But again, not a surprise.
I was going to say to you on that note, we've sort of seen this movie before.
Correct.
None of this comes as a surprise.
Right.
President-elect Trump campaigned on this, and the market was going up knowing full well that tariffs were likely anyway. Whether this is the first salvo in a prolonged negotiation,
that's right,
we'll find out. But the market certainly doesn't seem to be too concerned about that. On the note that you said about, so many different sectors have seen gains, if not record highs, right? Bank of America Securities today talks about the highest inflows that they've seen since September, that clients bought stocks in 9 of 11 sectors, led by comm services, tech, financials, and discretionary. Others are talking about a huge move higher in cyclical names. That was Savita at Bank of America today as well. Is that the kind of thing that we should continue to look for, those areas of the market to do the best?
I think that 2025 will end up being a positive year, but more muted returns broadly and not as concentrated as what we've seen for the last 2 years.
Why do you say more muted returns? If there's all this optimism about, a pickup in growth, using the pickup in growth to get at the deficit, you increase oil production. I mean, I'm just saying what the expected policies and things that will be championed by a new Treasury Secretary are going to be. If there's a lot of optimism about that, why are gains muted?
Yeah. So for one thing, we came into 2024, and this is a question that I asked myself thinking about writing the 2025 outlook, right? Can we have another 2024? And what's different about coming into this year than what was different about last year? We came into 2024 with the expectation of 6 to 7 cuts by the Fed. We're going to end up with maybe 4, and right now 2 more priced in. 2 more priced in for 2025. So less monetary loosening, right? Less wind at the back from that perspective. We also are coming into it with valuations at a higher level, but not just in certain sectors. They've gone up, as we've already discussed, across a number of sectors because of all of the appetite for buying. So there just isn't quite as much room. And when you look at things like valuations, now they're a terrible timing mechanism, but there's something that you have to look at over the long term.